Welcome to the Deep Dive, the show that cuts through the noise and gets right to the most important insights.
Insights you care about.
Exactly. And, we live in a world that seems obsessed with instant gratification, don't we? Especially when it comes to money. That whole promise of the quick win, hit a button, suddenly rich. Have you ever felt that pull, that desire for fast wealth?
Oh, absolutely. It's a really powerful feeling and honestly quite understandable.
Right.
But this deep dive, well, it isn't really about chasing those fleeting fads. Forget the lottery tickets for a moment.
Okay.
Our mission today is more about exploring how to build, lasting wealth, not by chance, but through strategic choices.
Smart management.
Strategic choices. I like that. So we've pulled together what we're kind of calling a wealth potpourri for you today.
A mix of fresh insights, yeah. Different perspectives on how to actually grow and manage your finances wisely.
And our goal really is to uncover those crucial nuggets of knowledge, the things that can help you take genuine control of your financial future. And the core idea, I think, the one we really want to emphasize is this. It's the small intentional shifts.
Okay.
Changes in how you think about money, how you behave with it, day in, day out. Those are the leverage points. They can absolutely lead to significant, big financial wins over time.
It's about working smarter, not just harder, basically.
Precisely.
That idea, small shifts leading to big wins, that's powerful stuff. But how do we actually, apply that? How do we make it concrete?
Right. How do you create those income streams that give you more me time?
Yeah, or more moments with family, maybe even the freedom to travel whenever you want, like on your own terms.
Well, one thing that really stood out from our sources is that achieving that creative freedom, it often requires an investment.
Money.
Time and money, yeah. Investing in education, things like webinars, boot camps, maybe.
So learning the ropes first.
Exactly.
Yeah.
That knowledge isn't just like a nice to have. It seems pretty essential for building consistent, reliable income streams.
Okay, and this next insight, I think, really highlights that potential. We found this story about a trader named Iris.
Yes, Iris.
She built a strategy that apparently suited her lifestyle perfectly, trading just 1 hour a day
1 hour?
to replace her full-time job. Just 1 hour a day. Now, for many people listening, that might immediately bring up questions of, was it just luck?
Right. How do you separate skill from just a fortunate trade?
Yeah.
Well, her success isn't just a story, it's documented. On March 26th, she shared a watch list with her trading community.
Okay, and that watch list helps them focus.
Right.
Cut through the market noise.
Exactly. Reduces the overwhelm. So after sharing that list, Iris executed a Tesla trade.
Tesla.
And she made, get this, $2,156.
Wow. In how long?
11 minutes.
11 minutes. Okay, that's impressive.
It really is. And the point is, this wasn't luck. It was what the source called stock acumen.
Stock acumen, meaning?
Meaning that specific ability to read market signals, understand maybe the company fundamentals, spot those high probability opportunities, basically finding the right stock at precisely the right time.
So it sounds like it's not just about picking a stock, but really having this sharp understanding of the market itself. How crucial is that awareness, that precision?
Oh, it's everything. It's
Yeah.
absolutely critical because even a winning stock, right, it can cost you money if your entry and exit timing is off.
Ah, okay. So getting in and out at the right moment.
Extreme precision,
Right.
understanding when to get in, when to get out. That's how you maximize returns and, importantly, minimize risk.
And Iris actually teaches this.
Yeah, she has an online course, the 1 hour a day stock trading formula for daily income. It's built on 3 key pillars.
Which are?
First, how to build a strong watch list that reduces your workload significantly. Second, how to master strategic entries and exits for better returns.
The timing thing again.
Exactly. And third, how to do all this efficiently, trading in just that 1 hour a day.
Huh. So the real takeaway from Iris's story, maybe, isn't that everyone should trade Tesla for 11 minutes.
Definitely not.
But it's the power of finding your strategy, something unique and repeatable that fits your life, and then refining it for consistent results.
That's it. Find what works for you and master it.
Okay. But what about the bigger picture? Beyond just trading, how do these small shifts we talked about earlier show up in, broader financial decisions, the ones that create truly lasting wealth?
Well, that leads us very naturally into what we're calling the slow wealth philosophy.
Slow wealth, okay.
Yeah, in a world that's just, obsessed with quick gains, this approach often gets overlooked. But patience, consistency, smart financial decisions, These are the proven
Like
keys,
fundamentals.
the fundamentals for lasting success.
Yeah.
Exactly.
And one of the most practical first steps, something often kind of underestimated, I think, is doing a spending audit.
The audit. Yes.
Now, most listeners probably know the concept, right? Track your spending.
Hmm.
But the deeper insight here isn't just what you're spending. It's uncovering the why.
The autopilot habits.
Yeah. Or those hidden subscriptions that just quietly eat away at your goals. It's about turning that unconscious leakage into conscious control.
It can be really eye-opening. And sometimes, let's be honest,
A little humbling.
a little humbling, yeah, when you see where all those small impulse buys actually add up.
Totally. Okay, so you get clarity on spending. Then what?
Well, once you have that clarity, you can start building assets that, work for you.
Yeah.
And another powerful tool for that, often called a lazy income machine, is dividend investing.
Dividend investing. Explain that a bit.
Sure. It basically involves building a diversified portfolio of stocks that pay out regular dividends. The key insight is generating consistent compounding cash flow.
So your money starts earning more money on its own.
Pretty much. And often with less volatility than, say, chasing high-growth stocks. It's steadier.
Right, steady income. And speaking of working smarter, leveraging what you have, here's a simple thought. Maybe you overlook your spare room.
Yeah. Don't underestimate the spare room.
It could actually be a significant asset. One insight highlighted the lucrative potential of renting out unused space.
And we're not just talking rooms. It could be anything.
Like what?
Parking spots, storage space in a garage or basement, even just a corner for someone's stuff.
So just monetizing empty space.
Exactly. It's a simple, often quite effective passive income stream that many people just don't think about leveraging.
Okay, and building on that idea of leveraging property.
It's house hacking.
House hacking. Tell us about that.
It's a really smart housing strategy. Basically, you find ways to have your primary residence generate income. Maybe you rent out rooms or buy a duplex and live in one unit while renting the other.
So it reduces your own living costs.
Significantly. And at the same time, you're generating rental income. The power of this is you're leveraging your home to build wealth much faster than, traditional methods. You turn your house into an income generator.
Turning your biggest expense into an asset.
Interesting. Okay, so we've covered leveraging existing assets, passive income. But true lasting wealth often requires a really thoughtful approach to strategic investing itself, right?
Absolutely. And on that front, we uncovered some fascinating insights from Monish Babre's book, The Don-Ho Investor.
The Don-Ho Investor. Okay, sounds interesting.
It is. It's a really practical guide to value investing, but with a unique perspective.
What's the core idea?
What really stood out is that the Don-Ho approach, it's inspired by certain Indian entrepreneurs, people who build wealth through what Babre calls calculated asymmetric bets.
Asymmetric bets. Meaning?
Think of it like this. Investing where your potential downside, your risk, is minimal, but your potential upside, your reward, is dramatically higher.
So, low risk, high reward.
Sort of, yeah.
Like,
But the emphasis is really on the low-risk part first. You're tipping the scales massively in your favor. Like imagine a coin toss where if it's heads, you win $10, but if it's tails, you only lose $1.
I see. You want those kinds of odds. Exactly. And the guiding principle, the mantra from the book, is really insightful.
What is it?
Heads I win, tails I don't lose much.
Heads I win, tails I don't lose much.
Yeah.
I like that.
So the crucial question then becomes, why does this really matter for wealth building?
Yeah, why focus so much on not losing?
Because so many investors, maybe unconsciously, chase high returns without really weighing the risk involved. This Don-Ho thinking, it completely flips that script.
How so?
It shows how strategic, low-risk investments can actually lead to substantial wealth over time, precisely because you're protecting your capital first. You minimize the downside while maximizing that potential upside.
Okay, so what are the actionable steps here? How do you actually do this?
Well, the advice is pretty clear. You look for businesses with strong fundamentals. Good bones,
Solid companies.
Right. Companies with competitive advantages, maybe what Warren Buffett calls a moat. And crucially, companies that might be facing some kind of temporary distress or are out of favor for some reason.
So good companies hitting a rough patch.
Potentially, yeah. You want to invest when the odds are overwhelmingly in your favor. And this is key. Avoid speculation. Don't just gamble.
What are the biggest pitfalls then? Like common mistakes people make trying to apply this?
I'd say the biggest pitfall is probably impatience. Or maybe overconfidence.
Ah.
People see the high reward potential and they forget the low risk discipline. They might jump into a distressed company without truly understanding why it's distressed or if it can recover.
So they speculate instead of analyze.
Exactly. Or they don't wait for the odds to be really stacked in their favor. The source uses an analogy. It's like playing poker.
Yeah.
But only playing when you're pretty sure you have a winning hand, like the deck is stacked for you. You need the discipline to fold, to wait until those prime opportunities come along.
Discipline and patience again. It keeps coming back to that.
It really does.
Okay, so we've talked traditional investing, strategic approaches like Dondo, but sometimes wealth generation comes from, well, the most unexpected places.
Doesn't it?
And this next insight, honestly, it surprised me. It's rooted in pure nostalgia. We're talking about your old Pokemon cards.
Yeah. Believe it or not.
Seriously, Pokemon cards.
It's a perfect example, actually, of how pop culture and nostalgia can translate into real financial value.
Oh.
Well, think about it. Rare collectibles, especially from franchises people grew up with and love.
Like Pokemon.
Exactly. Things like that can absolutely skyrocket in value over time, especially if they're rare in good condition.
So maybe it's actually worth digging through those old boxes in the attic or closet.
Honestly, yeah, maybe. You might just be sitting on enough to fund your next vacation. Or who knows, maybe even a down payment on something bigger.
Wow. Okay, note to self. Check the attic. So let's try and wrap this up. To recap this whole deep dive, building lasting wealth, it seems, really isn't about chasing fast money.
No, it's not about those immediate gratification hits.
It's more about patience, strategy, making
Mm.
smart, deliberate financial choices today.
That shape your future down the road.
Yeah.
Absolutely.
And the key, it seems, isn't necessarily working harder all the time.
No, it's about working smarter, identifying those leverage points we talked about.
Like automating investments.
Yeah, or maximizing income streams, whether it's
Yeah.
dividends or renting out that spare room.
And cutting unnecessary costs, like we saw with the spending audit.
Right. It's about building wealth efficiently and, crucially, sustainably. Something you can stick with.
Okay, so here's a final thought then, something for you, the listener, to ponder as you go about your day.
Little homework.
Yeah, just something to think about. What existing resource in your life, maybe an overlooked skill you have, or even a forgotten asset like those Pokemon cards, what could be your next strategic financial move?
Interesting question. What hidden potential is already there?
Think about it. We'll catch you on the next deep dive.